Hello, Warriors. I don't know if we can expect a turnaround Tuesday when we had turnaround Monday yesterday. Hi, Kevin, Brock, Didier, Ren, Michael, Shahab. Everyone doing okay? NG. So this looks significant to me in cable. The double top breakout, and we traded underneath it on the break. Hi, Sinatra. Money. And so far we're holding it. Although Euro's stronger than cable today. Euro looks a little better. See that? So between the two, especially now that I thought we were going to get a third drive in EG, that doesn't look like it's going to happen now. So cable's now become my preferred short over Euro. And the only thing that's holding me back is this RSI reading right here. But I'll go with price action. It looks like it's going to negate the breakout. That'll be a failure. And why can't we see this again on the failure 31.65? So looks like it may do it today. Euro might also pull back with pound, but I prefer to sell the weak sister. Yen, what a day yesterday. You know, in a way, on a smaller scale, doesn't the yen kind of remind you of what happened here? Only it happened here. You know, last week I was buying the yen at 61.8 right up here and never got stopped. And this looks pretty good. I mean, US dollar yen, the reason I don't like to play the short side of US dollar yen is my view on yields. And, you know, US dollar yen going up is bearish gold and bullish yields. So yields came back. And look, we pulled back right to this line. I don't, what do you guys, what are you guys talking about? Apple's head of Globe has been charged with bribery. That's weird. Yeah, but what does it have to do with anything? Nothing. Nothing. Okay. Anyway, I'll read the newspaper after I'm through trading. Thank you. Yeah. Okay. So yen looking good. You can't deny it. Nice pullback here. The strength is really in the commodity currencies. So it looks like we had some kind of breakout here in Aussie. We'll see if it can hold the breakout. Let's call it right here. It's right there. So right now you have a pullback to the breakout in Aussie. So out in the currencies, my preferred trade is looking for a short in cable. Okay. So, you know, I don't want to lose my lead. I don't want to lose my focus on Nasdaq. And Nasdaq, even last night, I put another one out, but yesterday, during face, was putting out a short here. Everything broke, but Nasdaq broke pretty good. And Nasdaq's a relative weakness, and so I just put another piece on after booking scalps here at 60, went to 80 last night. You know you're onto something when they can't bury you. So I mean, look at S&Ps; they're up almost 0.8% here, and Nasdaq's up 0.19%. And I think that we're going to be very close to the Dow having a third drive to a top here. Here's the ones that close, and Sansi gave me this one. So we're almost there at new highs. See this? Okay, so for a third drive. So we haven't quite done it. We're on the verge of doing it. And as you can tell, we're not over 70 yet, but we didn't take out this high yet either. Yeah, this high is 30,097. So that's going to be another 150 points to clean out stops. This was Pfizer. I think this was Moderna. Maybe this rally's AstraZeneca. So isn't that funny? We have 3 vaccines. You know how I feel about 3. So far 3, maybe 4. Anyway, doesn't. So Blake said to tread lightly this week. We have 5. And this action yesterday was pretty constructive. I thought that we were going to take out this 91.74. It didn't happen. The pullback in the dollar is much deeper than it was in yen. Look at the difference between the 2 pullbacks, right? So, if I'm going to be long, I want to be long the relative strength, which is the yen over the dollar. If I want to be short, I want to be short the relative weakness, which is the cable over euro now, okay? And the relative weakness in stock indices is Nasdaq. It's the weakest, followed by S&Ps, followed by Dow. I'm going weak to strong here, and Russell being the leader now. Okay. Oh, okay, you're talking about from other countries. And oil has finally made a new high here. Let me just see what it looks like on a 15-minute chart. Might be worth a shot. It's been unabated. I'm a little worried about the geo risk, but it could be a shot here. There's a little divergence here, maybe at least for a pullback to 42 or so. I certainly wouldn't be buying the oil right here. And the metals continue. So I don't think you could look for an important bottom. I know a lot of people are looking for 1800. I don't think you get an important low in gold until you get an important high in US dollar yen. And, this could measure back to here. This could end up being a pretty pivotal week in the yen. Here's the weekly. I know it looks busy, but we're on the verge of a 2-week reversal. And again, we had a 2-week reversal in Nasdaq last week, and by Friday it needs to close under right around here. And actually, the S&Ps are trading above it, 35.88. S&Ps look like they, might even try for a new high here. But there's something wrong with Nasdaq, and I've been talking about this for a long time. The relative weakness. Just go over quickly, and then I'll turn it over to Blake. Where is it? There's Apple. Apple got crushed yesterday. Okay. Microsoft not looking so great either. Google's starting to give it up. Amazon looking heavy. Facebook looking sad. And that's it. I rest my case. So Blake, you're right about this week having some volatility. Definitely started yesterday. Do you think we'll get some follow through?
Yesterday was brutal. It was brutal. Yeah, I actually got run over yesterday, and I was like, oh, where did that come from, and how did that happen? And and then it's more frustrating just to see the dollar where it's at right now. Now you were saying something like, and I'll go back and talk about kind of the market action here in a second. But you were talking about there's something wrong with the Nasdaq. I mean, what's wrong with the Nasdaq fundamentally is that, as you pointed out, there's three different vaccines that are coming, and probably more to boot. People's lives are going to go back to somewhat normal, I would say, by mid-year next year. So you're seeing the bleeding of these work at home stocks, and that's, you know, all the work at home, everything, you know, whether you're talking about Netflix or Amazon or, you know, whatever has to do with, you know, staying at home and being productive from home. I mean, that's going to be definitely more of the technology heavy stocks. So of course they're going to trade a little heavier, and you'll probably see that underperformance for a while. I don't see that changing. That doesn't necessarily mean you need to run out and start shorting the Nasdaq, but I think you're probably better served being in some of the bigger cap names, or maybe some of the S&P names, if you're going to be out there trading stocks. So now let's talk a little bit about yesterday. You know, I was trading, you know, on the long side of the euro, and, you know, I had a decent position. I was nice and profitable. You know, I was profitable from like the, you know, the 60s, and I'm sitting here, and, you know, I mean, look, we were breaking out, and we're above that channel resistance, and then all of a sudden, the really strong PMI numbers came out, and that started the sell off in gold, which then translated to a, you know, rally in the dollar, and the euro sold off aggressively to 118. I mean, obviously I was getting out below that, but I was like, I mean, when you got a nice profitable position from the 60s, and then you trade down into the 40s, it's pretty demoralizing when you know, see something like that go through your stops, and you're like, wow. And you know, the interesting thing is, you know, the guys from my office, we were just like, everybody was floored. And you know, talking to other banks, you know, everybody was just like, wow, it must have been more positioning than anything. And you couldn't really put your finger on why the moves were so aggressive, other than lack of liquidity, and then, you know, poor positioning. Now, obviously, here we are back. I wouldn't say back, you know, where we had been, but, you know, we've definitely regained our composure as far as the euro goes. And frankly, I have to say that we're still challenging the resistance here. And, you know, is this a false breakout? I guess, you know, maybe we have to look at it like this now, and just, you know, note that, you know, that channel's still in play, but we're up near the upper end of it. And that means you just need to be very cautious with the euro as we are below 119, you know, and probably below 119.20. And while we're below that, you know, if you're on the long side, you just have to keep your guard up, I think. We've seen a bit of a recovery overnight in some of these pairs, and you know, we've seen some volatility overnight. I want to point out that the S&P, and, you know, before I actually move on, we might as well just write up the bias chart here. So resistance is 119.20. Support is at 118. I mean, that's all there is to it, and you got to just be really careful while you're trying to navigate within here, because you can see the, you know, obviously yesterday's volatility hit not only, you know, I think if you were on the right side, congratulations. If you're on the wrong side, you know, the type of market activity happens from time to time. And like I said, we were all sitting there scratching our heads going, wow. But you have to be cognizant now of the 118 to 119 levels, right? You know, the cable's pulling back a little bit, and I think we have to be very careful if we get a sustained break below 133. But like the euro, we have, you know, looks like a lower high intraday. The euro is also doing the same thing. So we have basically 134 here as resistance. Support is at 133. And actually, I'll write down 132.60 because that was the low from yesterday. But I'm going to do 132.65, 133. And then resistance is at 134. And we just have to be a little careful with that. Okay. Let's go over to the, I was going to talk about the S&P. Now the S&P is up against triangle resistance. You can see it right here. And so the market's higher on a couple pieces of news. If you didn't know that Janet Yellen looks to be the next Treasury Secretary for Biden. Okay, so the market was expecting that, but one of the reasons why the dollar has weakened is because everybody's like, oh, wow, Janet Yellen's coming in. It's time to sell dollars, right? She's going to help engineer a weaker dollar environment and, possibly buy some equities and, or tell the, Fed to buy some equities and blah, blah, blah. She's everybody thinks that that's going to be the case.
Who do you think has more power, the Secretary of the Treasury or the Chairman of the Fed?
The Fed.
Okay. So
My
people
opinion.
are probably reading too much into it.
I don't know. I don't know.
Guys, if you ask me, one thing is for sure.
What's that, Steve?
The Fed's independence is once again solidified. I mean, they're now just even exchanging Fed chairman with secretaries,
Yeah.
I mean, it's not even fun anymore. Nobody even tries to pretend that there is any type of independence between the two institutions. And
where are they going to put Bernanke, Steve?
And I remind you that supposedly, for a very, very good reason, they are supposed to be independent, right?
They're supposed to be, yes. Are you, Steve? Are you still going?
No. I'm here.
Okay, I thought you were going to continue on here.
Janet Yellen.
Yeah, so Janet Yellen, she's been put in as Treasury Secretary. Also, one of the big events that happened overnight. One of the other things that the market was, looking at is that you got a concession from Donald Trump, and he says basically the transition team is going to hold on one second, guys. The transition team is going to work together with the Biden transition team, and then we should see a smooth transition of power. And so the market actually liked that. They're like, okay, well, he's actually conceding. Now, I know if you're a Trump supporter, you would say, well, he's still going at, still doing, through some legal processes. Yes, he is. But the market sees it as more of a concession than anything. Okay. And so the market is up on that. Now, those are some big, in my opinion, some pretty big news events that have both transpired over the last 24 hours. And I think the thing that I have to pay attention to, right, or that we have to pay attention to is why isn't the market up more? Is it all priced in now? So I think we have to start being a little cautious up here. You can see this, again, we're at what could be triangle resistance for the S&P. Resistance, oops, I didn't mean for that to happen. Resistance is at 36.45 for the S&P. We're going to still stay bullish while we're above 3,600 though. Okay. So we got to stay bullish while we're above that 3,600 level. All right. Excuse me. I'm sorry. I think over, this triangle while we're still building this, because this right here is actually more of a pennant. So, you got to keep, stay on the bullish side here, but support right now is going to be 35.60. Okay. That's triangle support. All right. Let's see. Let's talk about the Aussie, because Dale was just talking about the Aussie. So here's the thing about the Aussie. The Aussie broke this resistance above 73.40, and the market, I saw notes from like JP Morgan, like it's a bullish breakout, blah, 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 blah. You know, the market's pretty bulled up the Aussie right now. So I think what would be pretty demoralizing again for the bulls would be if we dropped back below this 73.25. If we got back below there, that would be, you know, I think devastating for the bulls. So I'm going to write down 73.20 intraday. Resistance, we have to mark up the highs here, which is 73.67. Remember, there's 127% extension out there. Okay. Kiwi. So the Kiwi, I had it as an ascending wedge. There was some verbiage that came out overnight from is from the New Zealand government to the RBNZ saying, hey, we think that you should factor in home prices into the, you know, the interest rate decisions. And they're like, yeah, thanks for the you know, the suggestion. We already kind of factored that in, you know, and then, but that's what really spiked the Kiwi up through resistance. Do I still think this? I was looking at it as an ascending wedge as we were in the 161% extension here. I can't be bearish, but I definitely have to be a little concerned because relative strength is divergent. So I'm just going to write down 70 cents as being resistance and support right now. While we're above here, can't be bearish, but this would be 69.50 basically. But still bullish because we're above that 68-cent level. Let's go over to the dollar Canadian. Dollar Canadian bounced off the 618 retracement. So remember, we had this false breakdown below 130. So while we're above 130, you have to be very careful about being bearish. And it's holding up relatively well. So, and even with crude oil, you know, just kind of staying pretty well bid. So I'm going to write down support as being 130. And this is key. Okay. Resistance is going to be 131.20 because that's where we went yesterday. We're still, well, we got to the teens, but you guys know that 131.20 is still a pretty big resistance for the Canadian up there. Dollar Mexican peso, we're holding above 20, we just came off quite a bit. Not sure why, probably some flow. Thing about the dollar Mexican peso is it's definitely flow driven. So if there's some flow that comes through this illiquid pair, it, you know, comes off. But support is at 20 or 19.95, and then resistance is going to be 20.18. And you have to keep in mind that it couldn't sustain a break below 20 yesterday, so it could be a false breakout. I think while we're below 20, you know, this 2085 level, which, as you guys remember, it was a pretty big, you know, breakdown point right through here, right here. Oops. Okay. As we're below there, you know, it looks bearish, but relative strength is divergent now, and it's pretty divergent. We might have got a false breakdown below 120, so just be a little careful on the short side of the dollar Mexican peso. Let's see, Swissy. So the Swissy, we are still. Oh, and by the way, the Euro Swiss broke out. Just in case you guys are watching that, you guys go back and look at that one. 90.85, and then this is a descending trend line. So this is Now it's 91.50. What did I say? 90.85. 90.80 is support. We're still range bound, but like I said, the Euro Swiss broke out. So my opinion is with the Euro Swiss breaking out, the risk is that the dollar Swiss starts to, threaten an upside breakout here. Okay. That doesn't mean it's going to, the rest of the dollar pairs are going to go. It's just that when you got the Euro Swiss and the dollar Swiss moving together, the dollar Swiss might be pulled up by the Euro Swiss. Let's see, US dollar, Norwegian krona, same wedge as we were dealing with yesterday. Support 8.96, resistance is descending, so it's at 902. Look at it tighten. We should be bearish this right now, but I'd like to see it crack through support to really, turn bearish. Okay. Dollar index, 92 is support, resistance at 92.80. I mean, this might have put in a false breakdown yesterday. I was pretty bearish the dollar yesterday, and then all of a sudden, we spiked up. And notice how we're holding that 92.10 level now. Even on the spike lower today in Europe, we held it. So I still think now because of that little false breakdown, I think you got to be very careful being on the short side of the dollar. I'm not bullish the dollar. I'm not looking at the dollar saying, wow, we should really just be buying dollars, hand over fist. But I would say that yesterday's move definitely scared a lot of people. Like you got a lot of guys in my office are like, yeah, I don't know how comfortable I am playing, the dollar short right now. Most of us, and I'm going to throw myself into that category. Look, I'm looking to buy the euro, closer to 117.50 or 117. I don't know if I really want to play it on the long side up here after yesterday. That doesn't mean it can't break out. I'm just saying that it's, now it's a little bit scarier of a proposition. So 92, 92.80. And especially if stocks come down from here, if stocks come down from here because they're at triangle resistance, the dollar should firm. It's another thing you should be thinking about too. Okay. Dollar yen. And I know Dale, this move yesterday, whew, I know he had stepped away from the computer for a little bit, but this is another one of those, moves yesterday. We were all just scratching our heads going, oh my God, I cannot believe we just squeezed like that. 50% retracement comes in at 104.71. Support now is at 104.15. I'm glad I'm not trading this one, but and let's take a look at gold. Oops, there's silver. Gold destroyed. This is another thing that would really worry me playing on the long side of the short side of the dollar is you've got gold really selling off. And, this could eventually have a negative effect on, like the euro or the Aussie. It hasn't yet, but gold's really pulling back here, and the 200-day moving average is our next support. That comes in at 1797. So, and I believe while we're below 1838, we have to remain bearish. All right, guys. So there's your bias chart. Steve, Stelios, how you guys doing?
Speaking
Good
of
morning.
bias charts,
Yes, go see.
Go,
Yeah.
Steve.
I'm about to upload it actually.
yes,
Oh,
Hold on a second.
you've checked
I've checked
that
it
we've
works.
uploaded, Blake, right? The change.
There you go. Check out the bias chart tab.
okay. So the bias chart, be
Yep.
right here.
Nice.
You can get the bias chart right on ForexAnalytix, which is nice.
Yeah.
That is very nice.
Live
Great.
charts, bias chart. Why do you need to go to any other platform?
That's right. That's right. So, Steve, great job with the developers. Guys, I'm going to pass it over to you. I've got a roll. I got to get over to the office, or over to that Zoom meeting.
The virtual office.
Yeah. You guys all have a great one, and
You do,
and,
mate.
Me too, Blake.
and thanks everybody for listening in today.
Thank you, Blake. So we had some more good news overnight and today. It's not certain yet, but it seems that Donald Trump is slowly letting go. Should I put it this way? But anyway, the process might be getting underway for the transition. Also, the markets are still quite happy about the 3 vaccines so far that we have, with their own different attributes and pricing and all that they're going to have. But obviously, we wait for more details on that. And overall, good sentiment. Everything is lovely. The world is great, and there's no problem anywhere in the world. So keep buying everything.
Absolutely.
I'm not long and I'm not short equities, and yes, I've missed this rally, and I don't care. I don't mind. Now, metals is something that I'm obviously looking at. Blake mentioned them. They are getting destroyed again today, and I think the most logical explanation is what we said yesterday, that it looks like with the vaccines and everything coming through and some kind of normality returning, the theoretical need for stimulus might decrease. That's what probably is driving metals lower, because they've been a safe haven. When things get really bad, they get bid. Obviously not when things get really, really bad, which is in March, they got crushed along with everything else. But you know how it works. And less stimulus means theoretically lower prices. The problem with that is that theoretically also less stimulus means less or lower equity prices as well. But that doesn't seem to be happening yet. So there is a disconnect. Personally, I'm still waiting 21s to 22, 21 to 22, somewhere in the 21s to buy silver, to start buying silver.
Yeah, it's a nice divergence. Equity
Yes.
markets are looking at the at least probably $3 trillion of stimulus that is coming within the next few months, and they couldn't care less about anything negative.
Yeah.
Now, on the other hand, metals or those that trade metals seem to take other things into account. Now, in my opinion, clearly this move lower, I'm waiting to see how it's going to unfold. It's going to be an amazing buying opportunity. So, I more than welcome it.
I agree, and I wrote on the chat room this morning, one of the most difficult things to do is to sit on your hands and wait for the trade to come to you. And I've been, you know me, guys. I was bullish from when it was at 15ish, and I got rid of my silver longs average of around 24.5 to 25. It was really good. And since then, I said, look, I'm very, very bullish, but I think it's going to be a leg lower. And I'm waiting and waiting, and I'm very bullish, but I'm still waiting to get long. So, patience is required, and that's what I'm going to do. Obviously, things might change. If we do seem like if we do look like we find support, and this was it, then I'm going to start buying anyway. But for now, I'm just waiting. So in other news, we talked about Biden, talked about vaccines. Cryptos, interestingly, are also rallying and have been rallying. And for people who have been ForexAnalytix subscribers, they know that I look at the macro picture of everything. And when Bitcoin was around 10,000, there you go. I said, look, I think along with everything else, cryptos are going to get bought and they're going a lot higher. Why? I don't personally understand enough about cryptos and Bitcoin to have
The
a
rising tide lifts all boats. And in this
yes,
case,
exactly.
the rising tide is
Yeah.
both the dollar devaluation, but most importantly, the currency debasement. That's
Exactly.
a global phenomenon.
Exactly. And I remember Bitcoin was 10,000, Ethereum just above 200. And I said, look, I'm very bullish. I don't actually trade cryptos myself, but I said, look, I'm very bullish. Friends of mine who asked me, what do I do? I said, look, I think here we buy. And that actually one of my friends bought Ethereum and he's done very well. Let's put it that way. But now I've gone back to neutral. I think we're a bit overdone.
We're a little bit stretched in the short term, right?
This parabolic move is a bit overdone. So my advice, people who have been long, I think it's a very good place to take profits. And well done for being long. And what else? Actually, something I wanted to mention. You're gonna laugh, Steve. The funny quote of the day. Remember when the Italian government was talking about and arguing with the EU about budget deficit percentage as a percentage of GDP? Was it going to be 2.5, 2.9, 3%? There was a big debate. The official statement, the Italian government expects the budget deficit to stand at 10.4% of GDP at the end of the year.
Sounds good.
There you go. So,
sounds good.
Yeah. I laughed when I saw that.
It's okay. Future generations are going to pay for it. Don't worry about it.
Of course.
Everything is going to be all right.
Maybe ours too.
Yep.
Dale, nobody's going to pay for it, actually. What's
Really?
going to happen? I mean, everybody's going to pay for it, but not directly. Let me put it that way.
Yeah. By the way, can you guys hear me okay?
Yes, you're not lagging today, if that's a question.
Okay.
Yes.
And the quality of the sound is good.
Yes, it's absolutely
earphones,
fine.
but okay.
Yes.
Good. And Brexit, well, apparently we're very close to some kind of deal or extension or something. Again, nothing firm yet, but the pound seems to be relatively steady and well below its, Euro pound is well below its recent highs. I still think it's going to move quite a bit either way when it gets announced or if we get a hard Brexit. But at the moment, there's little volatility in the pound, and we're just waiting. It's only a month to go. So
this channel is still working nicely, by the way. We're still failing to close above this channel. We made an attempt yesterday. We tested the waters above it, but with the late dollar rally that we had, we fell back below it. We closed there. So far today, unable to push higher again. So yeah, I mean, I'm waiting to see what's going to happen here. I still don't see an impulsive move higher from here, but ahead of this binary, obviously, event, anything can happen, and whatever happens is going to produce, a notable move. There's no question about that.
Yes. In other news, we had some data releases. We had German GDP came in better than expected, minus 3.9% year on year. Actually, quarter on quarter, 8.5% versus 8.2 expected. So better than expected. But again, in terms of percentage change from what was expected is not a lot. But numbers, they continue to come up better than expected, mostly. So,
yeah, the vast majority of the indices, though, account changes, and these changes now are changes from
very bad levels,
from very, very bad levels
absolutely.
that we plunge into. So yeah, that's something that people need to take into account.
Yeah, a bit like PMIs, which are now above 50, and people think we're back to where we were. No, it means we're not going down anymore.
Not at all. Yes, we're slightly expanding from extremely depressed levels.
Yes, exactly. Yeah, so another, not much else happening. We still have, we're getting close to month end now, and with the US holidays coming up, I think month end the flows are coming early. And from what I read,
Thursday is holiday, Friday is a half day, but I think that more or less the US is more or less in holiday mode as well.
I think tomorrow's a half day, Steve, and Friday's a full day.
Is it? I thought. Well, I don't know. We need to check this calendar. We need to check this calendar. But from what I read, apparently the month-end flows are going to be selling of equities and buying of dollars. So maybe we saw a little bit of that yesterday at the close or near the close. I don't know.
To be honest, Stelio, a lot of enthusiasm yesterday. A lot of people celebrating, like, dollar reversal and what so on. For me, that's purely noise, right? I mean,
Yeah.
if you
Yeah,
zoom in,
yeah.
what did we get yesterday? We got an outside spinning top. Okay, fine. Potentially can be like a turning candlestick, but with a lot of question marks. I mean, you need to get a lot of you
Follow through.
need follow through and verification, before you can even consider it. So far today, so we have like a black candle, which is an inside day. So has really something changed following yesterday's price action? The answer is no. Nothing has really changed.
Yesterday's daily candle was just the 5th in a row of indecision, and that was it.
Yeah, I mean, it was a whipsaw move intraday. So people that are day traders, I do understand that it seemed to be like a massive move and something worth mentioning. But all in all, looking at the charts, has anything really changed? The answer is no. Absolutely nothing has really changed. I mean, the dollar still seems to be under pressure, and equities still seem to be well bid. The only change, and I don't know if that's what you would be referred to, is that metals are actually getting sold. Other than the metal move, I don't see anything worth mentioning. What did you have in mind, Dale?
Oh, well, VIX is making a new low, but what I was going to say, the only thing that changed is now we're going to have to look at Janet Yellen on a Quaker Oats box for the next 4 years.
Yep.
Remember those?
Yeah.
You know how the people would put her face on the guy on Quaker Oats and she'd have a beard, and so people start doing that again. But take a look at the VIX right here, Steve. This is a new low for the move,
Yes, it
and we're
is.
near the high of the day. And look at that glaring divergence on almost any TF. I'm looking at the 4 hour, and we're trading at 40 on the RSI after making new lows. So just things can sneak up on you in this business.
Things can sneak up on you, and I do think that at some point this year we're going to have some kind of a flash of all the complacent of the complacent long crowd, right?
Yeah.
We know how this works. But do I really think that other than this, other like a sharp corrective move that's going to get it's going to catch a lot of people off guard, as it almost always does? Do I believe that we're going to have like some strong selling or some like big fundamental change in the trends of the market? I seriously doubt it. I seriously doubt it. Perhaps, as we've said before, but I think that's something that is not imminent. Perhaps we're going to get a buy the rumor, sell the fact when we actually have a vaccine, not when we start getting all the rumor mill about how efficient its vaccine is and how well it's going to do its job, so on and so forth. But when we actually get a vaccine and when we actually start climbing out of the hole that we've dug ourselves in with all the coronavirus measures, right? I'm not advocating they're bad or good. I'm just stating a fact here because a lot of debate can take place about which measures are good, which are excessive, how things should be handled differently in order to in essence get a compromise between the immediate health costs and everything else. But a fact remains that a lot of the measures taken for coronavirus have really damaged, among other things, the economy, because health has been damaged as well. I was reading like a couple of days ago how much drug dependency on like psycho drugs has increased during the COVID period and lockdown, so on and so forth. And we know there are huge costs outside the economic costs of quarantines and locking down people, So it's something that accurately we will only be able to say how well it was handled in a few years from now, because we're going to have a lot of data to analyze and review in the months and years to come. Anyhow,
Yeah, I hear people that own Teslas are going out and extracting the lithium from the batteries and ingesting it for stability of their frame of mind.
Lithium is only
Huh?
good for schizophrenia. So,
Oh,
and that is something that you cannot catch due to circumstances. It's either inherent or not. So I think
all
that
right.
the lithium is safe.
Okay, I guess. All right. All right. Well, then I won't siphon any out of my neighbor's Tesla.
No, I don't think it's going to help.
All right, buddy.
Doesn't help with depression.
Either? Oh gosh.
No. Unfortunately, you need SSRIs for that.
All right.
I'm very familiar with all that. One of my best friends is a psychiatrist. His father is also, and we, I like sciences, so we frequently have conversations, about like stuff. I have very interesting stories, but that's for for another webinar, obviously. So now back to our charts. I'll start once again from the metals, because this is the big move to talk about. So gold is poking its head below this nice confluence of supports. I'm not really surprised. I always expected that if we are to have another leg lower, everybody was waiting for 1800 to 1825, and I didn't like the fact that everybody was waiting for 1825. Yes, it's an excellent area of support. There is no question about it, but it's too good and too obvious. So we also have the 200 DMA here, by the way, right? You can see it here in the blue line, currently passing from like, what is it, 1795. So, between 1795 and 1825, we have multiple within these $30, multiple levels of support. We might hold, but I would even like more like breaking through these levels, getting everybody bearish, getting everybody that was long but has a weak hand. I mean, they got long thinking that they can put the stop losses below there and everything is going to be all right. I would like to see the market clean all of them up and then see some nice price action. And I would be interested in buying some in the financial markets as well, because I do have physical gold. I'm definitely buying silver though, no matter what happens. If we manage to break through this triangle and we start, flushing the market lower, I'm going to start buying physical silver. Between 21 and 19, I'm interested in buying a lot of it, and I'm not going to even mind if it goes lower than that. I mean, I'm going to buy and hold for years, so I really don't care. I should have done it earlier. I didn't. I had gold. It was my mistake, but I'm going to fix this mistake. If we see lower levels, 21 and below, I'm a buyer of physical. There's no question about it. So we have this triangle here in silver. Next downside areas of support, 21.65, the previous spike low, 21. Then we have the 200 DMA at 2040, and 19 is a very, very key level, because it was in essence the breakout area from this channel as well. You can see it here in green. After a huge period of time of that type of price action, which was scraping the bottom and building a long-term base to explode higher. So I think that this market is very unlikely to plunge through $19. Now, having to do with the rest of the assets, crude oil remains extremely well bid. We've already talked about it multiple times. It's very, very strong. It's like a beach ball. You can't really hold it underwater. Natural gas, look at this massive move higher, and don't say I didn't warn you that you should pay attention to this channel, because it's very likely corrective. And moment of truth is more or less here, right? Because now we're back testing this 290 area once again, which confluences with this channel trend line resistance. So we break through this 290 once again, and I think that natural gas is gone. You're not going to get another opportunity probably for quite some time to buy it. So, this is the level to watch. Breakout from here, I think, is legit, and I think we're going to 375 next. Now, platinum, palladium, other people are asking for it. Platinum backtesting this channel trend line support, resistance actually as support. Let's see if it works. Palladium still comatose in the short term. This is like what, the 10th consecutive day that's doing more or less nothing. Copper, like a beach ball as well. As the Kiwi breaking through this ascending channel, it seems very, very strong. I mean, we've seen no correction that still didn't manage to produce a higher low. So, an extremely strong market. There's no question about it. And I'm not surprised. I've told you before, I think that anything that has intrinsic value is going to be very strong, right? Anything that has intrinsic value should do very well. Hey, Steve, can you get silver via the Bank of Greece in Greece? I'm not really sure, to be honest. You can get gold, I can tell you that much, in the form of gold coins. I've never actually checked, and I don't really need to do so because I actually have a friend. Actually, he's a very good friend of one of my best friends. He has a factory that what it does is that it melts down whatever they send them and extracts gold and silver from it. So I can actually get my hands on silver from there with almost zero spread. So I'm going to get silver from him. I've already talked to him. At a much better price than I would definitely get it from the Bank of Greece, because I can tell you that the bid offer spread, at least in gold, is quite significant. I mean, just to give you an idea, gold coin is something like 400 euros and the spread is something like 30, 40 euros, something like that. So even if they're selling silver, I'm pretty sure that the spread is awful. So I wouldn't be buying it from there. Now, let me see. Bitcoin. Yeah, listen. Bitcoin is just unstoppable, right? We're very, very close now to the previous all-time high. And I think it's extremely likely that we're breaking through it. Just look at this move higher. It's really parabolic. And Ethereum took some time to catch on, but it has now done so, right? Now, watch, it has stalled here at this resistance area. But I do think that as long as Ethereum holds above 490, it's also in extremely bullish mode, right? So Bitcoin, next upside target 20,000, and then we need to start counting extensions from, that move lower. But I think listen, it's Bitcoin. At some point, it's going to really mess up with people that were late in the rally. There's no question about it. I mean, I wouldn't be surprised at all within the next few days to see a flash of like 20, 30% within a day. And a lot of people that are going to be weak hands are going to get kicked out of this market. But I think it's, you should respect strength here, and we should see much higher prices. That's what I think. Now, support for me is at 16,500. So 16,500, as long as we trade above it, I think it clearly is in bullish mode, and, fade it at your own peril, but seems quite a dangerous proposition if you ask me. Dale, do we have an interview, by the way, today? I'm assuming
we were going to have Ben, but his computer crashed last night and he lost his PowerPoint. So we have to reschedule to a week from Friday. So I guess
that's too
short
bad.
answer was a no.
It saddens me that still in 2020 people, A, don't use cloud, B, when we're talking about work computers, etc., don't have, backups. I mean, I have, twice a day backups of everything, and everything important is on the cloud. So, at least I won't ever have to worry about something like that. Okay, let's see what else we have. How high will US liquidity be this Friday? The most likely day of a Brexit announcement, USD down. Speaking of which, Dale, I think you're going to find that interesting. We hit a new all-time high in the Fed's balance sheet, 7.25 almost trillion, and that's before we get the next stimulus package. Now, another interesting piece of data is the fact that during March and April, right, there was, the US issued more than $1.5 trillion of bonds. Do you know how much of it the Fed bought? Dale, still with us? Anyhow,
All
the
of
Fed,
it.
all of it, every single dollar. Yes,
Yeah.
all of it. That, for people that think that Fed is still the buyer of last resort, it isn't. It is the only buyer. As simple as that. So that's why I'm saying, what do we expect? Minimum 2 trillion, probably closer to 3 trillion of a stimulus. All of that is going to go on the Fed's balance sheet. All of it. So, 10 trillion within the next 4 or 5 months, I think is a given. We have questions about euro crosses, and actually it's a good opportunity to have a look at the euro crosses. And by the way, Blake said that the euro Swiss has broken out. Just wanted to point this out. I still don't think so. You can see here in the chart why. I'm monitoring euro Swiss as well. I think this is the key area here, the 1085, and you can see why. It's this range's resistance. It's also the 61.8% fib from this move lower. So it looks decently bid, but I want to see a break above that. Now, having to do with Euro Aussie and Euro Kiwi that the friend here is asking, look, Euro Aussie is currently testing once again this just slightly ascending channel trend line support. I have to admit it looks extremely heavy. I think it's a very, very likely that it will eventually break down. And once it does, just look at the first leg lower, right? From 198 almost down to 160. We're talking about a massive, massive move. And following this massive move lower, what have we seen? We've seen from the beginning of June up to today a clearly corrective consolidation. So my assumption is that, confirmation that we're breaking down is going to be an extremely bearish event and has a very high probability of actually accelerating to the downside. So that's probably going to be a nice trade. Euro Kiwi, looks heavy as well. Big move lower, different type of correction. We're about to break through this triangle. I think both of them look very heavy and very, very likely to move lower faster than most people believe. And keep in mind that these pairs can actually produce hundreds of pips of moves on a daily basis, right? So keep that in mind as well when you when you choose what kind of leverage you want to use for trading them. Let me see what else we had.
Cable on the verge of breaking that double top right here. And that would be a failure in my book.
Listen, as long as this channel holds, the risk reward favors shorts, right?
Yeah.
Because you have a very limited risk, and even if we make it down to the channel once again, it's a very decent move, right?
Yeah.
So yeah, from a risk reward perspective, it looks quite promising. Somebody was asking about the Nasdaq. Nothing has changed with the Nasdaq, meaning, look at this, textbook symmetrical triangles so far, right? So looks like it wants to break higher, but wait for confirmation first. But, I think the chances are very good that it will just, punch through this and head towards 13,500. Speaking of 13,500, that's coincidentally or not,
Yeah, DAX.
more or less the same level that DAX is targeting next, right? So keep that in mind. And the DAX seems also very, very well bid. I mean, look at this massive vertical move higher. And following that, the only thing the bears managed to do is, keep price a little bit in check for like 10 days or whatever it was. But still, this is just a symmetrical triangle. Looks to me like it wants to move higher. So basically, as I said, nothing has changed. The risk seems to be very well bid, and the dollar seems to be trading really heavy. At some point, we're going to see some type of a short-term reversal. But waking up every day, crossing your fingers, and hoping that that's the day is not a trading strategy. It's quite the opposite of that, right? Okay, Dale, I think that's
Yes.
it for today.
Okay. Great review, like usual, Steve, and everyone. Tomorrow we will have a guest. John Nettle's going to be with us, and I'm not sure if it's a half day or full day. Either way, we will be here. I don't
For us
believe
here, for sure, it's a full day.
Thanksgiving, I don't believe we'll be doing face on Thursday, right, Steve?
No. Thursday we won't have any of our webinars. Friday though, we're gonna have face. Now, if you American guys want to have the day off, I totally understand it. But at least Stelios and I will be here.
Yeah, I'll be here.
Okay.
All right. So everyone, remember, don't just count your pips, count your blessings, and stay safe. And thanks for hanging with us. Adios. See you, Steve.
Bye bye, Dale. Bye bye,
All right,
everybody
bye.
else.